Welcome to Super Entrepreneurs Podcast. Today we have with us Charlotte Dunford. How are you, Charlotte?
I'm doing well. How about yourself?
Excellent. Thank you so much for coming on the show.
Thank you for having me.
My pleasure. Would you mind kind of introducing yourself in your own words, please? Like what you do?
Right. So my name is Charlotte Dunford. I am a partner at Johns Creek Capital, which is a private equity firm that focuses on small to medium level mobile home park syndications.
So,
And
so syndication, can you elaborate on that a little bit, please?
Right. So syndications is when a group of investors pull their funds together into a deal to buy real estate. So we focus primarily in small to medium level mobile home parks. And so we've been in real estate since 2019 and started Johns Creek Capital in 2020 with my partner. And we've grown from pretty much only two mobile home parks to 27 in our portfolio today. We actually just sold one, so that would be 28 without that one being sold.
Oh, that's great. So how does this work, mobile home syndication? Because mobile home wouldn't be that costly. So I'm assuming there are multiple units, right?
Yeah, so it's not really mobile homes, so it's mobile home parks. So it's a completely different kind of asset. So mobile home is not something we want to get into. Mobile homes are actually, they're more headaches, they're more of a liability, more of a challenge than an asset. They're like used cars, and you really don't want to deal with them. It is true that they're less costly to manufacture, but we're not in the business of mobile home investing. We're in the business of mobile home park, which is a land business, parking lot business, which is a completely different asset. So that's where we are. So usually, so a mobile home park definition is a piece of land with two and more mobile homes on it. So that's what's classified as a mobile home park.
So are there enough plots available that you can trade in these?
Usually when we buy a mobile home park, it's already occupied. It's almost never, people barely, if ever, develop new parks with vacant lots. Infilling could work, which means that the lot is vacant and then you put homes on it to fill the lot, but that has become extremely expensive in the recent years and not very I would say practical. So I think for most mobile home park investors, we're looking at a park that's mostly occupied with some room to value add.
So what is the price range for one of these projects?
Well, it depends on the size of the mobile home park, just like any kind of real estate.
Yeah.
Depending on what kind of real estate
Like
you're
an
looking
average,
for.
like a good buy, like something that will give good
That would be
return.
difficult. I think for my part, the niche that we're in, small to medium level, because the cap rates have been pretty much compressed recently. To get something, it's extremely difficult to say, but I think to get something, let's say 30 lot mobile home park, you're looking at anywhere from 1 million to 3 million. Depending on the occupancy, there are just so many factors in there. For example, if you're getting a distressed property that does not have a lot of occupancy, if you get a lot of a property with a lot more, park-owned homes, that also changed the valuation of the property. So you have to evaluate it based on the NOI, which is pretty much the rule to evaluate all real estate properties.
And if you're looking at a property around $1 million with, say, 30 lots on it, what kind of ROI can an investor look at?
So the overall return on investment, so the most important parameters are we look at the internal rate of return, which takes into the time value of money, which, inflation is happening and the value of money goes down over time. So
Mm.
we take into account that, and the IRR is important to us. So usually, well, an example would be a park that we sold in May of this year. Actually, that one we bought that one when the market was quite low, and we really got a good deal. It was a 20 lot park in Urbana, Iowa, and we bought it for $325,000, and then
Oh,
we sold it for $495 in May of this year. And in the meantime, we were distributing income throughout the way. So the overall internal rate of return we delivered for our investors was 19%. And the
wow.
annualized rate of return was 20%. So that was less than 2 years hold, 22-month hold. So yeah.
Wow. That's a unique project though, right?
What do you mean unique?
Meaning it doesn't come off. It's like one of those
No,
deals that,
well, none of the good deals should come often. So a good deal is always hard to come by.
so it is a good
So
deal, right? So it's
it
once in
always
a
has to be
while.
a good deal. I mean,
Yeah.
I would hope you will want to get a good deal if you're getting into real estate. And I think for us, it better be a good deal if we're buying it. So we wouldn't buy a bad deal. So it's special because it's successful. But I would say, in our portfolio, that's the goal that we'll always strive to be. We have 15 major parameters in determining how we acquire and in our acquisition strategy. So I would say that it's absolutely a good deal, but you'll always want to get a good deal when you're buying real
I
estate. You
understand.
never want to get a bad deal. So you want
Yeah.
every single
So,
deal to turn out like that.
okay. So basically working with you guys, investing with you guys, every deal that's going to be presented is special
Of course, it's special it's in different
in its
ways.
own
It
way.
either has
Mm.
good value add, or it goes in at a really high cap rate.
Mm.
There are risks involved in all kind of real estate investment. In any kind of investing, really, there are risks involved. But every deal is special, and every deal has its own highlights. But overall, we focus on the 15 major parameters that we developed, and to determine whether a deal is good or not.
Mm. And what's the lowest someone can come in and invest with?
The minimum investment for a smaller deal for someone is usually $25,000,
Okay.
but usually people do 50.
Hmm. And do you have international investors or just local within the
Not right
country?
now. We've never had
No.
any international investors, just because of laws and the regulations around it. But we might be we might be open to look at that in the future.
Mm. Are you guys planning on scaling into different real estate niches?
We plan on scaling vertically in our field in real estate, like maybe scaling to a slightly bigger niche where the price point goes up a little bit. But in the short term, we're looking to focus on mobile home park investing.
Mm. Okay, you're basically your model is designed that way with a 15-point check to stay with that strategy for now.
For now, yeah. For
Mm.
now, because mobile home park market is still attractive, and the need for affordable housing is still going up, demand is still going up, and
Mhm.
supply is keeping limited. So that's a great opportunity, and
Mhm.
you wouldn't want to switch to something else when this market still has massive potential.
Mhm. So what is stopping, or is there, like you said, regulations from picking up a piece of acreage, like piece of land, and creating your own mobile home park from ground
You
up?
could do that. We've never done that before. We don't really know anyone who's ever done that. I think that there are just so many regulations and zoning requirements, like what is the land zoned as, and the massive costs to develop a mobile home park. I'm not saying it's not possible. So first of all, you got to get the zoning and permit done, and that's an entire process in itself. And also, you have to put utilities in, right? So right, if you have public utilities, you're lucky enough you have public utilities, which means you're probably in an urban setting, which makes the zoning process even more hideous and even more challenging. And I think it will be extremely difficult to get permitting in a more urban setting. Let's say you're in a urban setting, you happen to get your permitting done, and you get your lots allocated, and it's a lot of development work to put in utilities, and that's we're talking about in the millions already at this point. If you're a multi-billionaire, then I think go for it, and you have a lot of construction background. There's nothing stopping you, but I think you just have to find the right legislature, you find the right government and the right city, and they support what you're doing, because they're not really keen on mobile home parks, and they actually want them to shut down sometimes. So I would say it's an extremely challenging project. That's why we've never done it. We maybe know like one person who's doing something like that, but you would need a massive amount of capital to be able to accomplish something, even scrape the surface of that.
Yeah, makes sense. Now, if someone wanted to invest with you guys, what would be the steps?
Yeah, the first step is the best thing to do is to go to our website at johnscreekcapital.com and just fill out the form on our website, and we usually respond within the same day. And then I'll set up a phone call with the potential investor, and I will go from there. I'll guide you through. But the usual process takes about 45 to 60 days, because that's the usual closing time frame.
45 to 60 days. Very good. And the minimum you said is 50,000, correct?
No, the minimum is 25,000 for a smaller deal, but a lot of people come in at 50.
Go 50. Okay. And do you find investors are returning to invest more?
Yeah. Most of our investors invest in more than 2 deals with us, and some invest in 10 to 12 or 20 deals with us. So, in a given deal, I would say half of the investors approximately are return investors, and the other ones are newer, because we do want new investors to have an opportunity to partake in our deals.
So it basically becomes like a relationship as well over time.
Oh, it always has to be a relationship to start with.
Yeah.
Because why would someone trust you enough to give you $25,000 to invest if there's no trust to start with? So I think it needs to be a relationship from the very beginning, not over time. But obviously over time, the relationship strengthens and it will have more of a deeper relationship. But that's more of a later on thing. But there has to be relationships to start with. You have to build that from day one.
Super important, to have those relationships, and they probably send referrals too, right? When they have a good experience.
Right, exactly.
Yeah. Do you guys do seminars too? Now that things are opening up?
Well, like we mostly do online webinars. Yeah, we actually mostly do online webinars. We actually have one coming up on October 5th. On buying mobile home park. They're free, and go to our website. You'll be able to see our past webinars that I've done and any future webinars that's coming up. And if you fill out the form, we'll definitely direct you to the any future opportunities that we offer.
So once they invest, how long does it take before they start seeing a return?
So we strive to make a distribution 1 full month after we close the deal. For example, we close something in October. You will see your first distribution in December, and we'd make distributions every month. And that we try to make distributions every month. Let's say in a given month, a property has not done so well, it has in, let's say, an accident, a water main break, or a sewer issue, plumbing issue, it caused lots of expenses, or say, like, let's say that month tenants have stopped paying, then we won't make a distribution. Or when we feel the need to replenish reserves, we also won't make a distribution. But usually, distribution every month.
So typically, an average investor that invests 25,000, on average, I'm saying, not a specific deal, on average, what can they expect as a monthly return? Just so someone's listening, they can get an answer.
That is a really good question. I think for the first year, I can't pin down a dollar amount. I can say a percentage.
Yeah, just approximate.
For the first year, you're looking at 2 to 3% return for the first year, because we're going through stabilization period, right? So when we're going through stabilization period, we're still trying to stabilize the management, establish a relationship with the tenants, trying to earn their trust, and we're trying to establish new contracts with new contractors. So all of those are upfront costs. So the first stabilization period, you're not going to look at too much of a return. You'll get something, but it's not something to live on. It's only 2-3%. So from the second that this process could last anywhere from 6 to 12 to 24 months of stabilization period. Once we get past that, you'll go through a period where you will see the rent increases kicking in. You will see the value add starting to happen. So maybe you will see a little bit less distribution just because we're kicking up our efforts to really do the value add, which costs a lot of money. Sometimes, it depending on the project, after this point, you'll be able to see the return regain its strength going up. And then our projects usually have pretty short hold times, meaning it's 2 to 5 years, if not less. So by that time, we'll probably get ready to sell after holding on to it for a little bit longer. And that's where you make the most money, is when you sell.
And sell is when? Like how many years?
So our hold time is usually 2 to 5 years, sometimes shorter.
Oh, okay. Okay, sometimes shorter. Yeah, I like the fact you're presenting things very open and honest, and I really like that. I appreciate that. You're not sugarcoating anything. You're just giving real facts, real numbers, and it's very important to people, right, when they're investing.
Right, you have to set expectations right, because that's the reality.
Yeah, but it could be better than what you're saying. Of course,
it could be better. It could be better. Yeah. I mean, the deal that we sold exceeded all the projections that we give investors.
Good.
But you don't want to set expectations high, unrealistically high, when you cannot meet that. That's the worst thing that could happen.
Yeah.
You got to set the bar low.
I like that. Yeah. No, that's good. I appreciate that. What would you feel that your inner superpower is that got you to this point in your life?
I think is the drive and motivation, and maybe resilience. I think coming from China at the age of 16 by myself, my parents never came with me. Yeah. And I pretty much had to learn everything by myself. I did not speak English before, so I learned everything from the age of 16, pretty much.
You have no accent or nothing.
Oh, thank you. Yeah. So really, I just had to figure everything out. So in that process, it's really close to being an entrepreneur, because in being an entrepreneur, a lot of times you don't know where you're going. No. So in that process of me being here at 16, figuring out the schooling system here, going to college, graduating college, and starting a company, I think that's all very applicable to the entrepreneurial kind of process. So I think that takes a lot of drive, that takes a lot of motivation, that takes a lot of resilience to be able to accomplish this process. It's really a exciting journey, also challenging.
Yes.
But once you achieve it, you understand a lot more about how far your drive and resilience can take you.
Yeah, because that story right there is really important for people that are investing with you, for example, because they're handing over money to someone who's been there. Like it's if they're investing, they need income coming in. They need to grow financially. So if they're looking upon you and investing with you, when you have that kind of story, they know that, hey, this person has been in the trenches. She's been through those stages. It just has that
Right.
different comfort level, I feel.
Right. That's what I hope to deliver to people, and also the experience that comes with my partner being on the team. He has lots of real estate and business experience, and I think we're a good team. I think, when evaluating a sponsorship team, you not only have to look at their characters, but also their
Yeah.
performance, their experience, they have done in their career. You can't just pick someone up from the street and expect them to run a
Yes.
project, and that's not going to
Yeah.
happen. Yeah.
Beautiful. Perfect. Thank you so much, Charlotte, for taking the time to come on our show. Thank you, audience, again for attending this session with Charlotte. I love you guys. Thank you for sharing and commenting, being part of the show. Share these episodes. The people that are coming on these shows, on this show, they have actually taking the steps to reach somewhere that you can learn from, and anybody else may want to learn from. So it's all about giving to others, service to others, and everything else kind of comes back by default. So keep at it, keep going, take action, learn from these episodes, and take action. And Charlotte, thank you so much again. Appreciate you
Thank
for
you.
taking the time.
Thank you for having me.
No problem.